What is the market telling me this week? This is the Nick Rutherford Report, and this is the place to be to get news for your net worth. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it. I really appreciate it. Let's get right into it. This week was a massive bloodbath, if you want a fancy, crazy, fear-mongering, catching headline, which is kind of interesting because we've been up in a perfect channel of stocks bouncing above their 20-day moving average, just the market going up, up, up. But Friday, Nvidia is down a whole 10%. So is it time to freak out? Well, what is the market telling me? Let's look at some data, because I always like to use data to determine what I should do. I shouldn't make an emotional decision. I should study the past and use economic data to determine what I should do now, and using the past, guess what could happen in the future to make my predictions. So one of the things that I like to look at right here is the 10-year Treasury constant maturity minus the 3-month. This is the yield curve, and it happens to be inverted right now. Let's talk about why that is important. That means the price of money in the future has been different than the price of money in the 3 months, and it's inverted from what it typically is. Now, if we look at this, the yield curve typically inverts during the last 1, 2, 3, 4 recessions, during the plague, during the great financial crisis, during the dot-com crisis, and typically the inversion looks to signal that there's a problem in the future. But if you look very closely, and this is a stat that most people talk about and then freak out about, but what the yield curve being inverted is telling me is to be cautious. But it's not time to freak out yet, because if you look back here during the plague, it inverted, then it uninverted, and there was a problem. Back during the financial crisis, it inverted, and then it uninverted, and then there was a problem. Same thing for the dot-com crisis that we had right here. It was inverted and then uninverted. So you can see that recessions typically happen after the yield curve uninverts. And if I look closely here, well, we haven't even come close to uninverting yet. Of course, something dramatic could happen. It could start to uninvert really quickly, maybe tomorrow. And that's why I'm looking for the market to tell me what to do. Because, yeah, we had a very bad week for asset prices, but not all asset prices, like gold, has gone up, and we'll talk about that later. But my point here is that I'm using data to determine what happens next. So what does happen next, and what am I doing about it? Well, some of the things that I watched this week are, this is an article from Zero Hedge that came up. You know, the whole financial media wants you to be scared. And small business confidence index was way, way down. It hasn't been this bad since the great financial crisis. This means that people are perceiving that things are very bad. They're very worried. And sometimes perception can become reality. So this is something that I'm watching very closely. I'm watching for data to tell me that things are deteriorating, because people are really worried. And if you've read the George Soros books on his topic of reflexivity, it's like a circle. So if people are going to feel bad, they're going to spend less, and then it becomes a self-fulfilling prophecy. So this could become a big problem, but it's not a big problem yet, because this could happen tomorrow, this could happen 6 months from now, this could happen 2 years from now. The next recession is definitely coming. We just don't know when. And I don't want to sit on the sidelines, because then inflation is going to kill all of my gains. Instead, I want to read the market data, and this is the principle that I'm harping on, and I'll be harping on every week, and use it to watch the market and have the market tell me what to do. Because on the flip side of it, we had advanced monthly sales for retail and food services that came out. And in March, we were up 0.07%. I know that's not a lot, it's not a big percentage, but what that's telling me is people are still spending more. And retail and food services is a big portion of the economy. And if people are spending more, then that leads to more profits. We'll have to see what happens next month, because of course people were spending more for the holidays like Easter. But if the trend is looking right, if the data is trending right, I'm not really scared if the market is pulling back. I'm not scared if Nvidia is gone down 10%. Now, of course, if the yield curve had uninverted and the data was telling me that it was trending down, then I would be freaking out. But we're not at that point yet. Instead, I'm just following my principles of letting the market tell me what to do by watching the right data points. And then I'm investing in good companies that are participating in good trends that I can identify. This way I can buy low and sell high. So one of the other trends that I've been very focused on is gold. Gold has gone up and up and up, even when other things have gone down. And one of the interesting articles that I want to point out this week is this chart that I found on Zero Hedge of gold versus the S&P over the last 5 years. You look at it and it's tracked pretty closely. And what do I mean by that? Like, over a long period of time, it seems to get to the same place within some amount of percentage points. I'm not going to nitpick it, because instead, I want to focus on the big picture of this trend. And why am I focusing on this trend? I want to bring it back to my principle. I like to identify trends and then get in on the trends so that I can buy low and sell high. And then I continue to monitor the trends. And that's exactly what I did last year when everyone was hating on gold. They were hating on gold miners. I bought a big position in one of my favorite gold miners that has almost doubled. So I've almost doubled my money in 1 year. And now I'm just checking in on this trend. So what is another thing that happened this week that is very interesting to me following this trend? And I'm not saying rush out and go buy gold miners or rush out and go buy gold, even though it's been up. What I'm doing is trying to convey my process of I'm looking at the market, I'm trying to figure out trends, and I'm letting the market tell me what to do. And right now the market is telling me, here's another thing. This is like a confirming coincident indicator. Now, a lot of people don't believe in these things, but I like to look at everything because I'm not married to some sort of Wall Street thing where I just have to look at things in one way. I'm looking for signals. And here's a big signal. People are excited about gold because after an illegal veto, Kentucky becomes the 45th state to end sales tax on gold and silver. That means people in Kentucky are getting excited and they want to buy more gold and silver, probably because the debt is exploding and inflation has been high. And we don't really need to know the reason they're doing it. All I'm doing is looking for confirming signals that are telling me that my thesis is intact. In this way, I can enter low and buy high. I'm saying that completely wrong. I can enter low and sell high, hopefully, and get some of the move. And all I'm doing is watching trends and trying to identify these signals. So, in summary, the market is telling me not to freak out because the data isn't bad. Yeah, things might be going down, but of course we can have a correction. And until that yield curve completely inverts, I'm really not worried. And in the meantime, I'm just looking for trends, buying good assets that are going to continue to profit from those trends. So stick around, subscribe to this channel, hit that like button, share this with someone, and tune in next week for what the market is telling me. Because until the market tells me to do something or presents an opportunity, I'm not going to do anything, because that's how investors lose money. And when you understand these principles that I'm using, I believe that you can become a better investor and get the results that you want. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.